Hello everyone, welcome with a new episode from the Market Sentiment, together with Anthony Fernandez from Economy. Also, is this call provided by Economy and also our company, the Traders Lab company, Software Indicators. Yes, where we gonna talk about, Anthony? Hi, how are you?
Hey Tim, thanks for having me back on the show. A lot happening in the market at the moment, so
Yeah.
very interesting time to have the catch up.
Yeah, for sure. We see that Bitcoin is falling. Some altcoins are bouncing, but not that great. We see also that we have nice on-chain levels for the short-term hodlers. But you provided also a nice analysis on the LinkedIn page from Economy, and that's where we're gonna dive in, I think. Yeah.
Yeah, that'll be a good place to start. So
Okay.
typically, I think Bitcoin from its peak is down around 15%, which isn't that bad considering the state of the rest of the market. Some of the altcoins are down 60, 70%. So yeah, there's a bit of selling pressure coming into the market, and we can dive into what's driving the market at the moment.
Yes. Okay.
Firstly, I think
I'm also curious what you think about the halving event this week. It's actually the perfect moment now, this call, to discuss that later in the setting. But yeah, there are a lot of outflows at this moment, indeed. Yes,
yeah,
you go. Sorry.
The halving event. No, that's all good. I think the halving event is in 2 days, so
Crazy.
it could be a non-event this year in terms of we see some tapering off rather than a price increase. So yeah, we'll cover that in later on in the catch up.
Yes.
I thought we'd start off by just reviewing some of the inflows, outflows into certain assets in the cryptocurrency space. Since the Bitcoin ETFs went live, obviously we've had more than 10 billion flow into those Bitcoin spot ETFs. So Bitcoin is absorbing the large portion of the institutional liquidity coming into the market. Ethereum this year now, so if we look at Ethereum year to date, that's had roughly 23 million of inflows, but month to date it's had minus 51.3 million over the past month. So a lot of liquidity has actually left Ethereum, which is why we've had a bit more of a sharper decline on Ethereum and those projects that are based on the Ethereum protocol as well. So yeah, some large amounts coming out of Ethereum. We've obviously seen some more profit taken from Solana. So Solana had, roughly 150 million of inflows in 2023, had a huge run to the upside, up more than 1,000%. So it's not surprising to me that we're seeing a bit more kind of reducing their exposure to Solana. So some minor outflows from Solana of minus 3.6 million. We've had some positive inflows into Litecoin, and also into short Bitcoin related products. So we're seeing some interest now at the institutional level to start shorting Bitcoin at the 70K resistance zone as well, which is not surprising, really.
Yeah, okay. Very interesting to see. Do you think we're gonna get more outflows out of Ethereum? Because it's a lot, huh? What we see now,
Yeah.
51 million month to date is actually not less. Or how do you say it?
We had a lot of inflows based on the Ethereum spot ETFs. So people were looking to front run the Ethereum spot ETF deadline. So the deadline is approaching, but I think based on a lot of the court cases in the US at the moment, maybe investors are growing a bit more nervous about the Ethereum ETF rather than being more optimistic about it. So that could be a combination of the market sentiment and also a bit of nervousness around the Ethereum spot ETFs that are coming up.
Do you think it's also something to do with Uniswap, the SEC problem with Uniswap?
Potentially, yeah. So the different court cases in the US, the SEC are going after some of the big players in the market. Whether it's right for them to do so is obviously another question. But yeah, it could be a combination of factors that are impacting Ethereum's AUM at the moment.
Okay, nice.
So yeah, just a quick recap on the flows, which I think is important when directing your liquidity. It's important to obviously understand where the money's going, number one.
Yes. Another question, Anthony, do you think for the flows, the ETF flows, that we have in this quarter the same inflows as previous quarter? Or do you think it's gonna be tempered?
I think it depends on valuations. So if we see a reasonable pullback in the stock market and in the cryptocurrency market, I then think we could start seeing some further inflows into the ETF. So I'll come on to the analysis in a second of the stock market and
Okay.
that up. But yeah, I think we're seeing this kind of stagnation and a bit of a plateau at the moment with the ETFs. So we're at a major resistance level. We've hit a record high before a halving event. We have a halving event in 2 days. We now have a number of macro events which are making the market slightly nervous. We obviously have geopolitical tensions in the Middle East. We now have inflation ticking higher as well. So I think that investors are being a bit more cautious rather than being more aggressive with their liquidity. And that is pretty evident in the daily inflows into the Bitcoin spot ETFs. There's actually a very strong correlation now with the daily price action of Bitcoin and the inflows and outflows into the spot ETFs. So if we actually take a look at this chart, we had a peak of inflows. We had roughly 15,000 Bitcoin added to the ETFs, roughly the 12th of March. That same day, Bitcoin peaked at 72,000, hit record highs at 72,000. Okay. After that, we then had a steep decline. So the outflows, we had roughly 5,000 Bitcoins worth of outflows. And then we also hit roughly 61,000 on Bitcoin, which was the low of the range at the moment. So we had a move from roughly 73,000 all the way down to 61, 62,000 within a matter of days. So
crazy.
Bitcoin's daily price action is actually pretty reliant now on the inflows into these ETFs. So it relies on the liquidity coming into or out of the market for price action.
Okay.
So yeah, when we're looking at the liquidity going into the ETFs, I think we need to understand what the macro landscape is at the moment, because things have actually changed on the macro side. And if we actually just scroll down and take a look at the overall financial market as a whole, I've probably shared this chart a couple of times on this channel, Tim, with you and your audience. It's the S&P stocks, S&P 500 stocks that are trading above their 200-day moving average. It's very simple. When it reaches the low area, the green zone, so this is between 0 and 20%, that's a great time to start accumulating and increasing your exposure to risk assets like stocks and cryptocurrencies. Vice versa, when it hits the 80 zone or above, that's an area where you want to be cautious and potentially reduce your exposure to risk assets and cryptocurrencies. So basically, it indicates that the market's overly bullish. More than 80% of the stocks are trading above their 200-day moving average, which is very bullish sentiment in the market. But it can also, what tends to happen, most of the market downturns have occurred once more than 80% of the stock market is trading above their 200-day moving average. And we recently had a sharp turn down from this zone on the 25th of March. So since we've hit this level, the stock market has been declining, and also the cryptocurrency market has been declining as well. So it's an area where you want to be cautious. There could be some downside coming in the stock market, which could consequently flow into the cryptocurrency market now, especially considering that Bitcoin is reliant on the ETF inflows into the Bitcoin spot ETF. So we're now reliant on Wall Street's liquidity at the moment.
Yeah, indeed. I hear my voice 2 times.
I can also hear your voice 2 times as well.
No, not anymore. Okay, but another aspect I want to cover here is when you look to the 10-year yield, it's also very high. And because of that, I think a lot of people go to safe havens because of the conflict in Iran and Israel. They buy bonds, and because of that, the yield goes up. Is that also important that we must see the yield go down before they gonna risk more in risk assets?
Exactly right. You've hit the nail on the head there. So what's happened over the past 3 months, the last 3 US CPI data releases have all come in hotter than expected. So over the kind of the past 6 months or so, we've had a lot of analysts forecast that the Fed will start cutting rates by June. And there'll be an 18-month window where the Fed starts to cut rates back down to roughly 3% nominal rate. Now, with the last 3 readings of the CPI coming in hotter than expected, the market's now readjusting. So it's very unlikely we're going to see a Fed rate cut in June. The earliest one could now be September, around that kind of time frame. So the market is now readjusting to the fact that we're going to have higher interest rates for longer. And I think that's really been the catalyst as to why we're seeing liquidity flow out of the stock market and the cryptocurrency market, because rates may stay elevated and they may not come down as aggressively as people initially thought. So it's becoming a bit more tricky at the moment. The market's readjusting. And if we just scroll down a fraction as well here, we can see that Bitcoin actually has a very strong correlation with the stock market since 2020. So during periods of growth, obviously they're going up together. And when the stock market's decreasing in value, Bitcoin tends to follow it as well. So this is why I'm kind of bringing up the chart above in terms of watching the S&P 500 stocks trading above or below the 200-day moving average, because this could give you an indication as to when to potentially accumulate some Bitcoin and when to reduce your exposure to digital assets as well.
Yeah, indeed.
Yeah, like you said, though, it's being driven predominantly on treasury yield spiking, so inflation surging in the US, picking back up. There's fears that inflation is now re-accelerating, which is dampening the possibility of Fed rate cuts in June or later this year.
Yeah, my expectation is also that gold goes very well now, and that it goes a lot higher in the future. What are your expectations about the gold price at this moment? Do you think it goes higher than this, or do you think more that it will rotate to more another asset like Bitcoin, and that we're gonna see gold dipping and Bitcoin take more profit from that?
Yeah, I think gold is obviously trending higher at the moment, new record highs. It's not surprising based on what's happening. If the Federal Reserve does cut interest rates, they still go ahead and cuts interest rates, and inflation is picking back up, that's actually an environment that's good for gold, okay? Because higher inflation, lower rates means a lower real interest rate. So that's essentially a good environment for gold. But they're also, if the Federal Reserve does cut interest rates, we have record low unemployment or extremely low unemployment, and there's also strong GDP. So they're cutting interest rates in a strong economy, which is actually good for gold, but not necessarily good for the economy. So yes, I see gold, the safe haven play is playing out with what's happening in the Middle East, and also now with inflation. That, funnily enough, you brought that up because, you know, Pax Gold has been, I guess, a bit of a hedge in my cryptocurrency portfolio over the past 6 months to a year. I've always had an allocation to Pax Gold. And, you know, I wrote a pretty interesting in-depth article back in October as to why this should be in your cryptocurrency portfolio, based on what was happening in the Middle East and what was happening with interest rates as well. So an interesting read there. Maybe I can share that with you, Tim, later, and you can share it with the audience as well. But at the time,
perfect.
Gold was actually trading around 1,924. We're now 2,300 at record highs. So going to be interesting how this plays out. But yes, gold has a place in my digital asset portfolio on Economy as well at the moment.
Yeah, Pax Gold is also in the portfolio of Patrick. He said also it is very good that he has it in portfolio. It is very helpful in times of more uncertainty. Where do you place Bitcoin in this at this moment? Because they always say Bitcoin is a safe haven when there's more economic geopolitical how do you say it, tension, yes, but we don't see the action we need on Bitcoin for that. How do you place Bitcoin in that principle?
Yeah, no, that's a good question. I think Bitcoin is a mixture of a number of assets. Okay, so number one, it's a safe haven like gold. Number two, it's a risk asset like a tech stock. Number three, it's a bit of a currency as well for exchanging services. So there's different periods in time where it's going to play to different areas of its use. So at the moment, Bitcoin is reliant predominantly on central bank liquidity. if there's no fresh liquidity going into the system, Bitcoin essentially is going to find it hard to move to the upside. And if we actually take a look at this interesting chart here, we can see that global liquidity has actually been decreasing over the past couple of months. Okay, so the liquidity coming into the Bitcoin market has obviously been driven by the ETFs. Outside of that, globally, global liquidity has actually been decreasing. Okay, and if we take a look at the bear market phases of Bitcoin, it coincides with a decrease in global liquidity. Okay, so in 2014, the bull market peak, we also had a peak in global liquidity and it started to run lower. Take a look again in 2017, the bull market peak, global liquidity peaked as well and started moving lower. Again, in the peak in 2021, global liquidity peaked slightly later, but also a sharp decline as well in global liquidity. So, you know, Bitcoin is a hedge against fiat currency devaluation. That's essentially what it is.
Okay, I understand it now. And because the yields are more higher, because they go in bonds to get more safety, the dollar goes up, and because of that, I understand what you mean.
Exactly right. So it kind of makes sense that because they're reducing liquidity, the dollar is strengthening, which means a bit of a pullback on Bitcoin. But on the flip side of that, if something in the system does break, if there is a recession or a hard landing, if inflation goes through the roof, if they have to provide financial support to the markets, the central banks, and they start to print liquidity again, Bitcoin's in a good position to thrive again, as it has done since inception.
Okay. Yeah, indeed. I follow you there. Perfect.
Yeah. But yeah, you know, Bitcoin is, I guess, a mixture of a number of different areas in the market. It's a safe haven. It's a hedge against fiat currency devaluation. It's a bit of a tech stock, especially looking at the altcoin market. They're definitely like these, you know, new tech stocks. That's why they're highly volatile at the moment.
Yeah, because altcoins are 50-60% down. Some altcoins. That's very much. If you have no risk management on that, your portfolio is very wrecked at this moment. What are your things you can say about that to get them some tips and tricks? What is important when you manage your portfolio, Anthony? Do you have some main principles?
Managing the altcoins. So I have some tokens that I'm never selling. So I'm happy with the drawdown. I'm just increasing my exposure every month. I'm buying some more. So I have certain like altcoins that I've held for the past bear market. I'm happy to hold going forward because I'm looking for those exponential gains. So, you know, you can split your portfolio into two. Your kind of short-term altcoins that you want to sell and have stop losses on, and then your long-term altcoins that you're never going to sell for the next sort of 1 to 5 years, and you're increasing your exposure no matter whether it's higher or lower. I think that's a good way to kind of split up your portfolio. Number two, I would say, obviously having a stop loss in place, being exposed to stable coins to make sure you always have some cash on the side ready to deploy. So don't be 100% invested at any one time. I always have maybe between 5 and 10% of my portfolio in stable coins. If the market decreases in value, I can then allocate as the market's going down. Vice versa, if the market does well and moves higher, I can trim down some exposure and put that back into stable coins in case there's another pullback at some point as well. So always having an allocation to stable coin or fiat currency to deploy at some point is also a good way to manage your portfolio. Yeah,
profit circulation is important in that way, yeah? Because if we go higher, we de-risk the portfolio, we take some profits to get in stable coins that we have some ammunition left if the market goes down. Indeed, that's very important to get, both sides. you can scale in on the downside and you can scale out on the upside. That's more... It's not that difficult, but consistency is very important for this way of manage your portfolio. Okay, next one. It was very interesting, that gold part. Now we're gonna see to the total crypto market cap, excluding Bitcoin, the total two. What's there your analysis about?
So this follows up nicely with the altcoin conversation we've just had, Tim. So if we're taking a look at the total crypto market cap, excluding Bitcoin, there was a major resistance zone coming into play at roughly 1.25 trillion. So there was expected to be a bit of a reaction around that area. Now we've had that kind of reversal. I'm now eyeing up the sort of 855 billion zone. I think if we do get a pullback into that area, that could be where we start to see some fresh liquidity come into the market. So I'm hoping we're going to see the altcoin market start to stabilize around that major support zone. We've already had a 22% reduction in the global in the crypto market cap outside of Bitcoin, which is obviously huge. Some of the altcoins are down 60-70%, which is very steep. So for liquidity to start coming back in, we need to see it stabilize around that 855 billion zone. That's where I'm going to start looking to start allocating back into some altcoins.
Yeah. Another question about that. We have now the altcoins and we have Bitcoin. But when we look year to date, Bitcoin outperformed the rest of the market actually, or mostly the rest of the market. Do you think that we're gonna see a more centralized Bitcoin cycle and that altcoins are not that big anymore? Or do you think we get both like in other cycles?
I hope not. I'm holding a fair amount of altcoins. So, Bitcoin's just dominating at the moment. The ETFs, they're just absorbing all the liquidity. I think it surprised me how much Bitcoin has dominated this market. I thought by now we would see some liquidity flowing down into the altcoins. There's been a couple of, projects that have done well. Look at Solana, for example, that's done well. But as a whole, the altcoin market really hasn't caught up to Bitcoin yet. It's nowhere near record highs, a lot of the tokens. So, I think a lot of it may depend on the Ethereum ETF approval process, whether they get approved or not. Because if they do get approved, it will open up the doors for a lot more ETFs for different asset classes or different assets in the cryptocurrency market as well. So, it's been very interesting. I've still been allocating to the altcoin market. It's not played out as aggressively as I hoped yet. So, I'm waiting to allocate some more at these lows, and we'll see how it goes over the next few months once we're past the halving event.
I think also that the Ethereum spot ETF is very important to get an altcoin one. And also when we get to new highs for Bitcoin and we go in price discovery for new all-time highs, that we also get a lot of higher expansion on other altcoins eventually. But what we also see, we had Monday the approval from the Bitcoin spot ETF in Hong Kong. That's also a big one. I think that's going to be a big impact on the crypto market in this whole. But what are your expectations from Asia vs the US market? Do you think there will be some conflict or some how do you say it? BlackRock vs other big funds from China? What are your opinions about that?
Well, I think the news has come at a good time because that's potentially why Bitcoin's held its price at that major kind of support zone at 61,000. So Bitcoin has held up compared to the rest of the market, which is good. I will say that, if you look at Europe, they have a range of exchange traded products with multi-asset crypto funds. So it's not like it's out of the question that an Ethereum or an altcoin ETF could get approved in the US. There's multi-asset structures in Europe already. Economy is actually exploring that as well for sophisticated investors. So it's not out of the question. But I think the news from Hong Kong has come at a good time. It's probably helped maintain the price of Bitcoin. I'm not sure if we're going to see the level of inflows where Bitcoin's at the moment. I think we probably have a lot of investors on the sidelines waiting for a more substantial pullback. Whether it comes or not is another question. So,
okay, interesting.
We take a look at Bitcoin's range. It's a fairly stable range at the moment, so it hasn't breached the 60,000 level yet. It's been trading in this range for a couple of weeks now. So until we get either a breakout either side, it's you can still remain calm, I guess. So you haven't got to panic just yet.
No, I think it's important to get some liquidity lower to go more to the upside of the range. And then is it very important that we break the range with a candle close or something on the weekly, that we get a confirmation to get a new run to the upside. But this is purely consolidation, and after consolidation we get always expansion. The only question we must ask ourselves is which way which way, we don't know that, and that's important to manage your portfolio and to get to set stop losses also. What are your main what is your main bear case or levels that we can hit in extremely bear case scenarios?
I think in a bear case scenario, let me have a look.
Nice chart.
We'll touch on that in a second as well. So
okay, nice.
If we just do some pretty simple drawing now, we can take a look at maybe 52,000 could be to the downside. We then have 47,000 as well. We obviously have this kind of order block in around
indeed
52,000. So there's a pretty large imbalance through here. So for me, on the downside risk, we could see a retest of that 52,000 initially, maybe 47,000. So that would be my next price point if we do break out of this range, which it looks like it is about to do so. So we're currently just pushing down under pressure now at the moment. If we get a close out of 60,000, then doors are kind of open for maybe a 52 touch.
I gonna share my vision if you want.
Go for it.
But I need to set it up actually. Second, I have also a vision about where we can go or where liquidity is. Let me look. I'm gonna share some things on the weekly or daily. Do you see my screen now? But what I see on the daily, we have two price points. This is an important low, and this one is an important low. We hit it with an equal low, and because of that we are searching after new liquidity lower besides that old low. But my main target is two levels. We have the low that we printed on the 5th of March, and we have an imbalance that is not filled yet. We have here, actually this is the imbalance, like this, but this part is filled by the wick. And when we look to that, we have the level of 58, and another level where I look to when I use the liquidity hunter, we see that there's a lot of liquidity, downside, upside we have also one liquidity level, 68. But my idea about that is when we take all of the liquidity imbalances like this, we have 55, actually 56k. That are my two levels where I can scale in. We have 58 and we have 56. And when we look with the Fibonacci levels, then you see nice confluences. Then I would scale in on this side. Second, from 62, you see the 62 level is actually aligned with the 58 level, what I said. And then I would DCA in this level. I'm gonna show you like this. in this zone 3 levels or 4 levels. One here on 58, one at 56, and one bear case at 54, yes. And then, yeah, you have also the order block, but I think we don't gonna hit that order block. It's my opinion. It's possible, it's possible, but it's not retested yet. But I think we're gonna get more liquidity in the market when we go beneath the 58. That's actually my main target. Yeah.
I agree. That's definitely something that could happen. If we take a look at it, depends for me. It depends on how severe the stock market pullback is. You know, everything's very overextended in the stock market. Look at the Nasdaq, the S&P, the Dow Jones. They're very overextended. So they are probably due a kind of a steep correction at some point. So depending on how that goes, I think that could pull down the cryptocurrency market a bit further before it kind of stabilizes. So I'm expecting this kind of halving event, nothing major to happen, potentially for a month or so. We could have a month of a correction or a month of a range motion in the cryptocurrency market. So it's going to need some time to stabilize. We need some lower data from America. So we need the CPI to start coming in lower, or we need to start seeing unemployment increase, unfortunately, or we need to see GDP data come down, which kind of gives the Fed some ammunition to reduce rates, because at the moment they're faced with a strong economy and they're saying they need to lower rates, but the market simply doesn't believe them. We're seeing interest rates surge to the upside in America at the moment. So that's putting a lot of pressure on all assets.
Yeah, indeed. Yeah, I have the same opinion.
Yeah. If we take a look at the cycle, though, long-term cycle, if this is the top of the cryptocurrency market, it would be very disappointing. We've not had a parabolic rally. We've not had that kind of extreme greed scenario, which generally happens in the cryptocurrency market. We've only really, gone just above the previous record high. So for me, based on previous bull market cycles, I wouldn't necessarily say that this was a typical top in the market, like a major macro top. It could be a short-term top for a mid-cycle adjustment, pullback before the next move to the upside.
Could it be a top like in 19?
Yeah, potentially. Yeah. Let's have a look.
Yeah, it's also actually the same formation.
Yeah. Obviously a pretty steep pullback before the COVID pandemic, during the COVID, then the run to the upside. So you've always got to expect the unexpected. So it was never going to go straight to 100,000 or 150,000. It goes in stages. Yeah.
Yeah, indeed. And now you have also it's a whole other market at this moment. We have not the market like in 17 or 2020. The liquidity is a lot different, and the strategies are also a lot different. And because of that, I think we can get another cycle than we are used to. That's also something to worry about, or get take more or take in consideration in your analysis.
If we take a look at what the dollar can do, the dollar index, I think this has some room to run to the upside in the short term. So it looks like we're about to breach this kind of resistance zone. We had a 73,000 market top around this area, and we're now starting to see some upside on the US dollar based on a repricing of the interest rates in the US. So, I wouldn't be surprised if we started to see a move back higher on the US dollar. It got to 109. In an extreme scenario, maybe it can come and retest this level over here. Similar to, like you said, what happened in 2019 during COVID. We had a run back into a similar area over here as well before a reversal. So yeah, it's going to be interesting, but I think watching the US dollar, understanding what the Fed is going to do, trying to interpret what their Fed speeches are saying, understanding what other central banks are going to do, because globally now, interest rates are starting to creep to the upside. They are here in the UK as well.
Yeah, okay. I don't hope it's like 19, but we will see. It's just the data we can use and anticipate on that. Yeah.
It's exciting time. You know, if you haven't allocated yet, it's an opportunity to allocate more in different price points, the dollar cost average. So looking at the adoption rate, what's happening with the ETFs, if we zoom out and just kind of take a breath for a second and think in 1, 2, 3, 4, 5 years from now, for me, Bitcoin is going to be a considerably lot higher than what it's at today.
Yeah, of course. And also with our portfolio on Trade the Chain, we scaled 60% in the portfolio in DCA, and we have 40% left. Is actually very nice to have. Also, we see a lot of downside in our portfolio, but the 40% we have left is very good to scale in on levels that we seen in a few months back. That's very nice to do actually, and that's also important to take in consideration till where we gonna go before you sell something, or before you hit the stop loss, because if we had a scenario like 19, we must sell something to get back in on lower prices. That's also important to take into consideration, of course.
I think you, in your portfolio, Tim, you rotated into cash at a good time. So, you know, you raised cash at a good time. You withstood quite a bit of drawdown from the other altcoins. So you timed that very well compared to some other portfolio managers on the platforms.
Yeah, thanks. We do our best, but it's not simple.
No, of course not. It's a waiting game at the moment. I mean, if we just touch on what the 2 years doing.
It's high, yeah.
Yeah. Let me just reset this 1 second.
Crazy, yeah?
Yeah, exactly. So it's broken out of a major long-term trend, as has the 10-year as well. So we've seen a major breakout of this negative trend line. You know, so everyone was expecting a pullback from these levels and a rotation lower, but the market now is starting to kind of creep to the upside. So it's inflation's proven to be sticky, that's for sure.
Do you think that the correlation with macroeconomics is more important than the ETF flows?
At the moment, yes, I would say so. I'd say that the global liquidity is really what's driving the market at the moment. Before going into, you know, you can do all the technical analysis of some altcoins, all the fundamental analysis, look at inflows, outflows. If you don't understand what's happening on the macro side of things, you know, it may not necessarily work out, because central banks globally are reducing liquidity or raising interest rates, or inflation is running higher, which is putting pressure on the Federal Reserve to raise interest rates as well. So understanding what's happening on the macro side and global liquidity will help you make investment decisions as to when to increase or decrease your exposure as well.
Yeah, okay.
Yeah, I think the macro side is more important at the moment rather than the inflows.
Yes, for sure.
Outside of that, we can take a look at the available supply.
And you can also look to the short-term cost base is also interesting to see.
Yeah, definitely. I mean, available supply is decreasing, so that should support higher prices of Bitcoin. I think the macro side is having a bit more of an impact at the moment, and investors are getting nervous. So we are seeing a decrease in the available supply across exchanges. That is growing down pretty quickly. And I think if we remove the last week's worth of inflows and outflows into the ETFs, they're actually consuming around 4,000 to 5,000 Bitcoin per day between them. And of the available supply, it would take them roughly 1 year to consume the whole available supply that's on the market at the moment, which is not long at all.
Crazy.
Yeah.
Yeah, you see now that we're gonna go to the short-term cost base. At what level is it now, the short-term cost base?
Looks like it's around 58,800.
Yeah, that's an important level. And you see also when we get a big drop, we go also beneath that short term, because then they are break even and they're gonna sell because they gonna risk their they gonna manage their risk and you get a further sell-off to the downside also.
Yeah.
That's a very important point in my opinion.
We're not far from that level, yeah. So 58,
no.
59,000, not far at all. So
yeah. Okay, and the long-term cost base, that's already past, but I don't know. The long-term, at what level is that?
20,000. So that would be
very low.
That'd be a worst-case scenario, I think.
Yeah. That's very, very low. Okay. Do you have other insights for us, Anthony?
No, I think we've covered a lot on the macro side. We looked at the inflows, outflows, had a look at gold, some technical analysis. We've touched on the available supply.
Total 2 also, altcoin in total. Yeah, I think that's the most important. It's not valuable to do some technicals on altcoins because the global liquidity is not rising. The macro environment is very bad, and I think we must wait till that's more stabilized in that way.
Definitely. I would recommend people try and get this chart up on TradingView. So look at the S&P 500 stocks above 200-day average. For me, I'm going to start looking to allocate some more cash when we get down to this kind of 30-20 zone. That's the green light for me, both in the stock market and the cryptocurrency market.
Okay, and which ticker is that? I have it on my chart, but for the people that look to this call.
S5TH.
Yes. Okay. Thanks.
Yeah.
Okay. Then I want to thank you for this nice insights. It's very valuable. In the coming weeks, we're gonna have Gert van Lagen in this call again. I invited him, and he will be in the next 2 weeks on the next market sentiment. And then we have Anthony back lately in May, I think, to get more valuation about the markets. I want to thank you, Anthony, for this call, for your time. Let's speak the next time or about more positive prices and positive markets.
Yeah, thanks for having me. Don't forget Bitcoin's up at 70K, so we can't complain too much where we've come from over the past year. So
yeah, of course. Think positive. We must have corrections to get opportunities in the market, and that's an opportunity that we have now. It is what it is, and we go on. Thank you.
Cheers then.
Bye.